Hey traders from around the world, what is going on? It's your boy Ricky Cadden back again with another free real life stock review just for you from Real Life Trading Australia. Hope you guys are doing absolutely fantastic. It is Friday and we do have tons of stocks to cover. We did get a lot of reviews from my last video, and so we'll take a look at those stocks. But first and foremost, guys, we'll take a look at the broader markets and what has been going on in the markets. So as you can see, we did get a white candle gapping up on the SPY, which is a retest gap. The volume is also increasing, so I do expect us to find somewhat of a little bit of a resistance up at this particular level. It was a resistance in the past, and as you can see here, we have been rejected 2 days in a row now, just right here. So if we can break above this level, obviously we will probably break out, trade sideways for a little bit, and then possibly go higher. But if we do kind of break up to here, retest, come back down, filling this retest gap back down here, and possibly coming back down to the 100, that would also make a lot of sense as well. Here's the E-minis. Now the E-minis, we are currently having an inside day bearish candle. Not a whole lot of volume just yet, but once again, at a resistance level, expect a little bit of volatility, and we'll kind of watch and wait and see how the price action travels over the next couple of days. Here's the ASX 200. Now the ASX 200 is still at a support level. Did not end up breaking too much lower. I did mention we possibly gapped down. We actually gapped up and then retested and then went lower. Either way, guys, I think that the ASX is realistically just waiting to see what goes on in the US with the whole Trump and Biden election. There is going to be a little bit of volatility, so strap in. It is going to be a bit of a roller coaster ride. Here's crude oil. Now, I did mention probably for the last few weeks that crude oil is going to go down lower, and we did create this beautiful little double top action and sensational volume the last 2 days. And as you can see, we are breaking down a little bit. I do expect this to continue. I did mention in my last review that potentially we could come down to about 34, but around 34 to anywhere between 34 and 36 is going to be realistically the level where we're going to start to see a lot of volume come in and a lot of liquidity getting bought back up. Here's gold, ticker symbol GC. This is the GC futures, the gold futures. You can see that we are consolidating right here just below the previous all-time high in 2011. I do expect this to be fairly slow at this point. If we do come back down to the 100, it will be a buyable event once again, but long term, guys, you want to be bullish on gold. Here's the Australian dollar, the AUD USD. Now, right now we have got a very nice little bearish candle. Not insanely great volume, but you can see we did create this beautiful double top. We close below the neckline. Here's the close, and we're simply just retesting the neckline. So we could potentially come back down for a nice double bottom. But long term, guys, I just think we're just going to consolidate in this range for probably till the end of the year. So just keep that in mind, all you forex traders out there. Now, we did get a few requests. One of the requests was from BC wanting me to look at the candlestick video for A2 Milk Company and Bubs, ticker symbol BUB. So take a look at A2 Milk Company. Now, I did mention this in my last video that this is coming down to a nice level of support. So this is a beautiful level of support. Volume is starting to kick in. And I did mention not to just rush in all at once. Let the trade come to you. Let it bounce around for a little while. If you take a look at the weekly chart, this is the 100 simple moving average on a weekly chart. The last time we were here, we were kind of down here for around about 7 or 8 weeks. So you don't need to rush in. This is just more so you want to keep this one on your watch list. We did also have a beautiful gap and go on the weekly chart, so this is obviously a fairly bearish gap, but back on the daily, guys, we are consolidating. The volume is starting to drop off, which is really good news, and hopefully we don't take out this particular low. If we do take out this low, we do have a gap back down here in November last year in 2019 that could potentially fill, and if we take a look at the weekly chart, that would bring us possibly back down to the 200 as we move higher. But we'll just have to wait and see how this kind of transpires, guys. So A2 Milk Company. Now, if we were going to look at the financials of this particular company. I will just kind of brush over these just shortly. There are a lot of financials to look at, but this is a beautiful company to be investing in long term. Just taking a look at, a quick breakdown of their income statement, guys. I mean, take a look at their total revenue. If I just bring over a calculator over here, just to kind of put things in perspective of what a high growth company could potentially look like, their cost of making that, 1.7 1.7 million here in thousands, so obviously in billions. But the cost of the revenue here is 762,000. So just to kind of put this in perspective, here's 762. If we just divide that by their total revenue, which is 1730, multiplied by 100, they're using 44% of their revenue to create 1.7. So I hope that kind of settles in, and it shows that this is, they're not using all their capital that they're making just to make their gains. And if you take a look at their cash flow as well, their cash flow is looking really, really nice. They have a lot of free cash flow, and they have each and every single 12 months, they have just kind of been growing consistently and paying off debts as well. So that's kind of the A2 Milk Company, a bit of a financial review of them. Here's Bubs, ticker symbol BUB. Now, Bubs Australia, this is a little bit more of the opposite spectrum to A2 Milk Company. Now, the reason I say that is, one, this is not an uptrending stock. You can see we have had higher highs, but now we're starting to create lower highs. And realistically, guys, we've been going down for the last 2 years almost. So, yes, we are up on the last few years, possibly since 2017. But one thing also possibly to note is they did have a stock split back in January 2017, and it was a reverse stock split of 3 to 50. So generally when that happens, not a great sign of a high growth company. Taking a quick glance at their financials, here's Bubs, and you can see here their cost of revenue. They are, their cost of revenue in millions, obviously this is, so 51 million. If you just take a look at this here, they spent 39, right? They spent 39, divide that by 51, and multiply that by 100, and you can see that they are spending 76% of their revenue to make $11 million profit, which is really, really not that great, guys. Just kind of keep that in mind when you are, looking into these companies' financials. Understand why they're not a high growth company. Also, their free cash flow is definitely not there. They're in a negative. They have a lot of investment activity. Their capital expenditure is actually increasing each and every single year. So realistically, guys, this is not a high growth company. It's not something you're going to want to be parking your money in. Now, that's obviously the financial side, the fundamental side. If you take a look at the technical side, though, I do get it if you wanted to buy off the 200 simple moving average. I totally understand that, but me personally, if you're going to be investing in something, make sure you understand that it is a high growth company and you're looking to invest long term for their long term capital growth. Got a request from SMN. Now, he wanted me to look at ATVI. Now, mate, ATVI is actually one of our swing trades in our swing trading room. And as you can see here, we did get into this particular trade back here on this sensational high wave candle based off this volume here. We did have an entry above here, and right now you can see we are currently breaking out on Activision Blizzard. We are breaking out of this particular downward trend line. Beautiful volume, love the increasing volume. I do expect us to continue and trade higher. If we do break out with volume, just expect a small little retest. And I mean, we've been consolidating here since July. So July, August, September, October. That's 4 months that we've been going completely sideways. So ATVI definitely looks like it is going to start uptrending. We did also create new all-time highs. It is a previous level of resistance, so old resistance becoming new support, and as you can see here, that was pretty much exactly where we got in on the retest of that previous all-time high. Got a request from Elizabeth Yu to take a look at ZIPCO. Now, ZIPCO is one of our favorites here at Real Life Trading Australia. A lot of our members are in this. They also did get into this particular trade based off this hammer candle. I did point this out in a couple of my reviews. If you kind of just rewind back to my reviews back around the 14th of September, I did mention this is going to be a very nice dip buying opportunity. So if you did take that particular trade on ZIPCO, then well done to you. You are going to be reaping the benefits of this one. ZIPCO is everywhere, guys. It's even at Big W. I mean, you're seeing these signs absolutely everywhere. Be aware of what's going on. Take a look at their financials as well. I mean, they are high growing companies. Once again, you can see here, I mean, let's bring out the calculator. Let's bring out the calculator again, guys. 68, just the cost of their revenue, they're spending 68 million. They're spending 68 million. Divide that by their 159. They're spending only 42% of their gains to make the $90 million profit. So that is absolutely fantastic. Their free cash flow, not positive. However, they are reinvesting their capital back into their balance sheet and kind of just bringing that down as well. As you can see here, their balance sheet is just growing and growing and growing and growing. So definitely a high growth company. It is going to be something you're going to be wanting to hold super long term. Right now, if you aren't in, just look to try and buy on a pullback. Sensational volume the last 2 days. And yeah, ZIPCO looking really, really fantastic. Liz also wanted me to look at Workhorse. Now, Workhorse is... Yeah, so Workhorse is probably on the opposite side of the spectrum for me. Now, Workhorse is obviously has been going bullish on the back of all the Tesla hype and all the EV cars, all the electric vehicles going higher. A lot of these companies, they do sell auto parts for electric vehicles, and Workhorse has just been going absolutely parabolic. I mean, take a look, guys. Since June. Right, since June alone, we have come up over 1,000%, like about 1,000%, like 924. I mean, that's, come on, guys. If a company is going to be growing at that particular rate, they need to have the capital, they need to have the contracts, they need to have a lot of things financially, or fundamentally, I should say. They need to have a lot of things fundamentally showing that they are, in fact, growing as a company. Now, for them to be growing 900%, take a look at their financials, and this looks a little bit skew-if. So you can see here that the cost of their revenue, their total revenue being 376.56, I do not agree with that. This cost of revenue is the cost of their revenue being 5 million, and then the cost of their profit, their gross profit, being a negative. Now, these two numbers definitely do not add up to that. So there's a little bit something kind of squirmish going on there. I don't really see the play fundamentally in this particular company. Yes, their balance sheet is growing, but I do believe this is going to be obviously the stockholders and liabilities. So this is going to be, because the stock price has been going higher, obviously their stockholders' equity is going to be increasing. Their cash flow is negative, guys. Absolutely negative. I guess the one thing that they're possibly doing is paying off debts. But yeah, fundamentally, guys, this does not look like a strong company at all. I do think this is more so of a short and is just all about the hype. Also, taking a look at their fundamentals here on FinViz, have a look at their income, guys. Their income is minus 1.37 million. Their sales is only 200,000, and with a market cap of 2 billion. I mean, come on. $200,000 on a $2 billion market cap. Their short float is also sitting at 23.15%. So there are a lot of people looking at this going, there's not quite something going on here. Not quite something right going on here as well. So a lot of people short on this. I totally agree with the short play. The long play, though, I think it's all hype. So just kind of stay away from this one. Anything you're going to be doing on Workhorse is more than likely going to be day trading. But long-term investing, I don't see the play, especially because, since, if we take a look at the monthly chart, take a look at the monthly chart. The only time that this has been going up is simply when all the hype came in about Tesla. The majority of the time it's been roughly around $3, and to be honest, that's possibly where I believe that it's going to kind of stick around and stay. So that's my kind of thought. That's my thoughts on Workhorse as well. And as you can see back here in 2015, they also had a reverse stock split of 1 to 10. So yeah, not looking overly bullish. Got a few companies here to look at for my boy Richard X. First off the list, he wanted me to talk about a few mining companies, and so we'll take a look at Glencore. Now, Glencore obviously being on the LSE, you're going to be wanting to, looking at Glencore, it really is looking bearish, guys. It's not looking bullish at all. Take a look at the weekly chart. I mean, no matter which way you slice it, there really isn't any bullish play to be looking at going long. I see the short play on the weekly chart. You can see you've got this beautiful little head and shoulders pattern, and we have closed below the neckline here on Glencore. Not a whole lot of volume coming in as we speak for a bullish play. On the week we've been quite bearish. On the monthly chart, these are all looking fairly bearish as well, all these monthly candles. And on the daily chart, if I take a look at the daily chart, guys, I mean, we've been just rejecting the 100 and the 200 simple moving average for quite some time. If and when we do get support, most likely we'll come back into about 139 or 140 and some change. That would be where it would start to come into my radar, and I would expect to see somewhat of exhaustion volume. And you ask what that kind of looks like. Take a look what happened back in around COVID, after we had this really fierce drop. We had all this bearish activity, and then all of a sudden we have this big bullish bar kind of stopping the trade from going a lot lower, and then kind of reversing. That's something that I'd be looking at happening on Glencore. Just keep your eyes peeled for a bit of a spike and a little bit of a trade sideways, and then we'll possibly trade a little bit more bullish. But long term, guys, you want to be if you're thinking about parking your money, I mean, have a look. In the last 2 years, this has done nothing but go lower. So in terms of parking your money here, it's not really something you want to be doing long term. Here's BHP, and this is on the ASX. So BHP, I mentioned back here, guys, that we're going to be staying within this range possibly for about 6 months. It's been about 6 months now, and we have just been kind of, trading back up to the all-time highs and then back down. If you are looking at buying BHP, take a look at the weekly chart. Possibly come back down to the 100 simple moving average. We also have had on the daily chart, you can see a nice little lower double top. We've broke down below, retested the neckline, and possibly could come back down to the 200 simple moving average, which is around 34.37. So on the weekly chart, 34.37, guys, is roughly around here. So just keep it on your watch list. There's no real bullish play yet on BHP, but I do get the short play at the moment. And just if you are looking at doing BHP, you're most likely going to be doing non-directional trades, whether you're looking at selling put options, selling covered calls, and the like. So keep that in mind. Here's WHC. Here's Rio. Here's Rio. Now Rio also is going to be consolidating for quite some time. I did mention in my trading room to a couple of my traders that 104 is going to be a very hard level to break above. So if you own Rio long term, you're most likely going to be selling covered calls or selling options against your stock if you do own shares of Rio at around 104. But realistically, guys, we're coming back down to the 200 simple moving average, and on the weekly chart, once again, this is a double top, and this is a previous level of resistance at 95.53, and we have, being Friday, almost closed below. Obviously, once the market closes, we'll see how this kind of goes, but we are closing below the neckline. So The next level of support is most likely going to be this level right here at around 92, and then once that breaks, guys, it's pretty much a given that we come back down to the 100, and that would definitely be a dip buying event. So the first level here being 92, this is going to be a very strong level, being the 200 simple moving average on a daily chart for Rio. Here's Newcrest Mining. Now, this is going to be one you're going to want to watch. So Newcrest Mining is obviously a gold mining stock. So gold miners, with gold kind of just consolidating right now, gold is about to pop. I do expect that Newcrest is going to follow. We are forming a very nice level of support here at around $30.93. And I do expect us to kind of bounce around here for a little bit. Let's take a look at the weekly chart. We're in a very nice uptrend. We have been for quite some time, and we are consolidating with some beautiful volume coming in right now. You can see here, every time we kind of start to drip down sideways, the volume steps away. So that's when all the buyers are going to start stepping in. We have got a beautiful hammer candle. I mean, Chris Hemsworth himself would be jealous of that particular candle right now. But that's Newcrest Mining. Obviously, keep an eye on gold. This is the reason why I do speak to you guys about the gold futures. Keep an eye on gold, and the gold mining stocks will tend to follow. Now, here's Whitehaven Coal. You did want me to look at some coal companies, Richard. Now, coal, obviously, these coal stocks have been going completely sideways for a very, very long time. Take a look at the weekly chart. This is not a high growth company. Once again, I mean, technically, on a technical level, we are at a previous low. I totally get that, but also have a look at how long it took from 2016 to 2019. The stock, yes, the stock did rally quite a bit, but try to quote unquote pick the bottom. I'd rather just invest in a high growth company. I mean, in the last 10 years, this stock has gone all the way up, all the way back down, all the way up, and all the way back down. There are people that hold here, they don't sell here, and they hold all the way back down here, and then they look at selling their position here at a break even. Not really the way you're supposed to be playing stocks, in my opinion, but definitely just keep an eye out on these coal stocks, guys. They are pretty beat up, and especially when we're moving into renewable energy sources, they will start to dwindle a little bit. And here's another coal mining company, Stanmore, on the ASX as well, a ticker symbol SMR. On a technical level, yes, we are at the 200 simple moving average, but fundamentally, guys, I mean, not fundamentally, but technically, we've just been going sideways for the last 10 years, and not really something that I can really get super excited about. So that's my thoughts on coal. Now, you did want me to have a look at some copper companies. The first thing you want to be looking at, Richard, is you want to be looking at the copper futures, because this is what's going to be, ideally, what's going to be driving those particular companies higher or lower. You're going to be wanting to look at the actual futures price. So this is the futures price. HG is the futures for copper. And you can see right now we are coming back down to the 100 simple moving average. Take a look at the weekly chart. We're also coming back down to a nice level of support around the 200. This is possibly where is this? 278. 278 is, so the 100 simple moving average around 278, 279 is most likely where we'll probably trade to on the copper futures. And if we kind of relate that to just another copper company, here is ticker symbol SCCO, which is the Southern Copper Corporation in the US. And you can see it has been kind of just following the lead of the copper futures, pretty much almost identical. You'd have to put these charts side by side, but we did have a nice little breakout, and we could potentially come back down to the 100 simple moving average. And so obviously, if we do get a pullback on copper futures, roughly down to these lows at 42.20, that would be a nice dip buying opportunity. So kind of just watch out for that one, mate. And here's one on the ASX, which is Castillo Copper Limited, ticker symbol CCZ. And once again, following the futures price almost to a T as well. We're starting to come down. If you're looking at buying CCZ, the 100 simple moving average are around 0.037. I don't generally at all, actually, I don't trade penny stocks at all, but if you are a fan of them, that is going to be a dip buying opportunity. Now, you also wanted me to take a look at Flight Centre, ticker symbol FLT. Now, Flight Centre, obviously, as the borders are going to get opened up to New Zealand, hopefully, there is going to be a little bit of travel. And yes, there are going to be some companies that are going to open up and start to rise. Obviously, Flight Centre does look like we are going higher. The volume, though, is starting to kind of step off just a little bit. If you look at the shorter term moving averages, yes, the shorter term moving averages are bullish, so you are going to want to be bullish, but this is short term, guys. We do have a very strong resistance here at $16.12 on Flight Centre, and the weekly chart, we're pretty much at the 20 EMA. Now, I do think we could potentially go higher, but I don't think we're just going to run to the moon as quick as we fell. You know, a lot of people say if it falls fast, it goes up just as quick. But unfortunately, COVID is going to slowly take its toll on Flight Centre. Speaking of airlines and traveling, here's Qantas. You also want me to take a look at Qantas. Now, Qantas is on the longer term moving averages. We are kind of squeezing between the 100 and 200 simple moving average. So this will be a nice level of resistance on Qantas. I do expect us to find some resistance at that point. Any of these particular companies, whether you're looking at Flight Centre or Qantas, you're going to be realistically, you're going to be looking long term. Like, I'm talking, take a look at the weekly chart or the monthly chart and have a look how long it took to get higher. So, for example, back when we were at this particular level, around 2016-ish, it took a couple of years for us to get from, say, 3 to 6. And you just got to ask yourself, is this where I want to park my money for to double my investment for, you know, over the next couple of years? Could I park it in a different company that actually does have high growth and is not affected by the economy so much? And also, last but not least, we'll take a look at the cruise lines, and this is another one you're going to want to be looking at the longer term trends. So here's Carnival Cruise Corp. Now, Carnival Cruise Corp did trade a little bit bearish, as they did say that they were going to cancel a few of their cruises just yesterday. So they did go a little bit bearish yesterday, and you can see here we are currently below the 100 simple moving average. Me personally, I do believe that long term, anywhere in this green box is going to be a nice little buying location. But when I say long term, I'm talking like 2 to 5 years. So just keep that in mind. Also, take a look at the monthly chart. Have a look where we are, guys. I mean, right now, we're at 1503. We're back here at 2008. Also back at the, in the dot-com bubble back in 2000. And we did eventually go higher. I do believe once that the travel is starting to open up, that, cruise lines will be one that people want to kind of take advantage of. And here's the Royal Caribbean, ticker symbol RCL. And I did actually give this trade setup away in my trading room and potentially one of my stock reviews back in the day. But back here in July, I did mention on this day that we'll possibly trade back down, find support, and then bounce back up to the 200 simple moving average. So I haven't actually moved this line yet. And as you can see, it did take a little bit longer. We did take like an extra month, but we did end up coming back up to the 200 simple moving average on a daily chart. And then right now we are just squeezing between the 100 and 200 simple moving average. Me personally, I'm not going to be overly bullish on the cruise lines until we get a nice strong close above the 200 simple moving average, potentially after earnings, and then a retest, and then finding support at the 200 simple moving average as well. Then I'll look at going bullish long term, possibly getting into some leaps or some nice synthetic longs, some nice put sales, or just buying some straight out awesome shares on Royal Caribbean. Alright guys, that is enough from me. I know this was a long video. I hope you guys stuck around. And if you did find this video of some value, make sure you like and subscribe. Click the link below. And if you do want to be a part of our swing trading floor, I do give this analysis each and every single day to all of my traders. I do go into a lot of depth in these trading rooms as well. Hop on over to reallifetrading.com.au. You can subscribe. It is only $129 a month. And guys, this is extremely cheap compared to the gains that we are making, especially this month, and I mean pretty much all year. But and if you do want one-on-one coaching with me, I do also give out one-on-one coaching, but you can get it as a bundle package with a yearly subscription, and you will get 3 bonus coaching sessions with me as well. All right, guys, you guys are absolutely amazing. Thanks again for all the requests. If you want me to look at anything else, put it in the comment section below, and if you haven't yet done so, join our Facebook group. It is a private group. I'll leave the link in the description below. Join us there, be there, or be a triangle, and I'd love to see you guys a part of our community in the future. All right, have a fantastic weekend, and until next time, love life, live life, and trade it. You guys rock.